We can start with any of these companies. I'm going to start with Tesla, mainly because it seemed like, at least among this huge downdraft, it was the one that was somewhat spared, though we should point out it came into today already down like 40% from its recent high here.
That was like, spared from what? I mean, it's down a huge amount this year,
yeah.
You know?
Okay, well, I was trying to be optimistic, give you a glass half full setup. But talk to me. I mean, do you find any sort of hope here? I mean, you've seen big valuation drops. Some of these companies are clearly going to be resilient and find a way through this. It may take us a few weeks to actually get to that point. But I'm curious that when you look at the downdraft here, separate the wheat from the chaff. What do you sort of walk away from, and what do you maybe embrace?
So firstly, I'd like to say to investors out there that this is why you have a financial plan and why you should be using a financial planner like Gerber Kawasaki, because when these things happen, you can't really plan for it, and it really blows holes in people who are taking way too much risk in their overall portfolio. So when you look at the revaluation of U.S. stocks under these new Trump, what I call economic destruction policies that he's putting into place currently, the revaluation of the U.S. markets isn't that surprising when you actually look at the PE ratio of the S&P. Even after today, there's still more downside to get to a more normal valuation. So there's just going to be no premium to own U.S. stocks with Trump as president with these policies. So, I always caution people to, who want to sell everything and whatever. Market timing is a bad business, and you shouldn't try to time this market, because there's no doubt in my mind that these policies can't be implemented without economic destruction. And so this is just a bargaining point that this is a crappy way to do business, basically. And so what they're trying to do is force all these countries to lower tariffs so that we can lower them too. But in the process, he's creating a lot of damage, and the worst part of the damage is the consumers have just stopped spending. And this is really something that I don't think they factored in.
Yeah, and I am curious. I mean, I know you're not an economist, Ross, but there has been some hope, the idea that once we actually saw real market pain and, more importantly, real economic pain, that somehow this White House might scale back some of these policy proposals. Do you have any hope that that could be the scenario?
Well, certainly Michael Dell is probably not that happy today with these policies. He's a big Trump supporter. And, Tim Cook sent $1 million to Donald Trump, and they all thought that they could get Trump to act with policies that would be beneficial to America. But what they're getting is what they should have understood they were getting, which is somebody who is really not using modern policy thinking. He's working in the 20th century, and we're in the 21st century, and it's a byproduct of his age and his ignorance. So America is in a tough spot right now with the beginning of the Trump presidency starting like this, and this assumption that everything's just going to work out okay and this will just be short-term pain is a really, really short-sighted view. And so once again, I caution investors now to look at their portfolios and make sure that they have a balance. We're not telling you to get out of U.S. stocks for sure, because, things could bounce back tomorrow. You could just say, sorry, I was drunk. I don't know what I did. But like, what really matters is what allocation you will keep moving forward to stocks in general and to U.S. stocks. And that's where I think investors, including my firm, is reassessing the investment environment globally to look for better opportunities in the United States, because these policies are just destructive.
Well, we talked a lot, at least on this program, Ross, coming out at the end of the quarter, about that massive outperformance that we saw with Europe relative to the U.S., quite frankly, the rest of the world relative to the U.S. And even today, in fact, despite the huge sell-off we had here in the U.S., you actually saw some markets, including in Mexico and Canada, actually show a little bit more resilience. Is there the knock on a lot of those countries and their markets was that they weren't really growth stories. They weren't really tech stories. They really didn't have that narrative of exceptionalism that we had here. I mean, do they have that now simply because maybe the U.S. is off its game?
I think it's more that our allies, like in Europe, have now really been hit with a hammer. That not only are we not going to protect them militarily, but also economically, and essentially going to war with them. The Europeans and the Chinese are two massive economies as big as the United States, each of them, and they don't necessarily need us. And I see a lot more cooperation now between Europe and China on business, because they just can't, rely on us as their ally. And this is a huge mistake for the United States long term. And what it will do is embolden which were once mighty nations just 500 years ago to start taking steps to stop being so docile. And I expect Germany and England and France to take very aggressive business and economic and military actions to become much stronger. And that's why we're actually very bullish on China and Europe through this. And if you look at the actual market performance globally, the United States is the worst market in the world, and the rest of the markets were up as of yesterday. So I think the money is showing you where you should be going in investments like in gold, getting much more yield. I mean, look at rates today. We have a ton of bonds in our portfolio, and they rallied hardcore to offset the losses that we had today in the stock market. So once again, you need to build a very diversified portfolio to get through this. It's too hard to say, and we're not market timers. I'm not going to tell you to sell your stocks or to buy your stocks. What I say is that if you own quality investments like the Mag 7, for example, this is not the time to bail on them because of bad policy. And remember, for long-term investors, Trump isn't going to live forever, and he's not going to be president forever. And so you have to think about what your long-term financial plan is and where stocks fit in that plan, and not try to time the market or not try to make drastic emotional decisions. You know, one of the hardest parts of being an investor is separating your emotions on days like today when you lose a ton of money, like we lost a ton of money today. And for no reason. The economy was in great shape. Everything was going great until Trump came here and decided to just blow everything up. So there's no reason why we can't repair this in a rapid period of time. So as I said, this is going to be a tough time for investors, and one should make sure that you have a good financial plan.
Obviously, you guys have a lot of investments in the tech space, and we're maybe about three and a half weeks away from starting to get earnings out of those big tech names like the Metas and Alphabets of the world. What do you actually want to hear from them? I mean, I'm not talking about numbers, but I mean, in terms of them articulating how they're going to manage through this, assuming that these tariffs are going to be around for a while. What do you want to hear?
Well, firstly, you have different businesses that have different effects. For example, we own, as one of our top holdings is Netflix, and you know there's obviously no tariff effect on Netflix. On the other hand, you have a top holding like Apple, where there could be a substantial effect on their business. So first, there's the analysis of like, how much does this really affect me? And then once again, I think this is fluid, so I don't know if any of these numbers actually stick and for how long, and so on and so forth. And I think the challenge of investing in this period of time is that, you know, what we're going to hear in earnings is great numbers. It was a great quarter, you know, and then they're all going to say, we have no idea what to expect for the rest of the year, and they're all going to guide down. And that's what's going to put pressure on the markets for at least the short-term period of time. Is no business owner in America today can easily just say, I know what my earnings are going to be over the next year. And even for my business, a month or two ago, I could have told you what our revenue would be this year, no problem. But now I'm not 100% sure. And we're having a phenomenal year at my firm up until the other day. And so why America is shooting itself in the head and its economy in the head for no reason is just, it's like, I don't know what to make of it. So, people voted for this. It wasn't per se me, but people voted for this. This is a democracy. He did not lie. He said he was going to do this. This is what America wants. And now we're getting it, for good or for bad.
Yeah, we certainly are, Ross, and it is a good point here. I mean, this should not have been a surprise. He spent more than a year and a half on the campaign trail telling you he would do this, and as Trump would always like.
Honestly, I challenge the business leaders that empowered Trump to do this, to stand up to this nonsense and do what's best for this country. This is not what's best for this country. I'm sorry.